Hey, good evening, everybody. Ken at Tortoise Capital. This is December 22nd, nightly strategy podcast for Tortoise Capital. I've been trading pretty well in the last year. Here's some quick numbers on the IRA. I tend to be a little more active in the IRA than in other accounts because it's favorable tax treatment. And so the numbers are turning out pretty well. So far, so good. Knock on wood. Let's see here. I want to get to. There we go. All right, so let's take a look at the let's take a look at the 30-day range first. So here's where we made our our 10-day, our 30-day, an all-time high. 1, 2, 3, 4 days ago at 372.5. And then come down to the 30-day low down here at 351. So 351 to about 372.5 is only about a 5.6% 30-day range. And pretty soon that's going to come up to here. And then in about 10 days to here. So we're getting a range compression as this 30-day low is relentlessly climbing forward. That's what happens when you get such a steep upward move. You can see that, how the Bollinger Band means are sloping up. The Bollinger Band thresholds are sloping up. The 90 is the health of the trend on the next higher time frame. That's sharply up. Notice the dragon is sharply up. Although we're a little bit concerned here with this rollover at the dragon peak at 369.7 and the RL10 peak right about the same. And the previous RL10 peak is here. So that's a little bit troublesome. As we start rolling over, you see the RL30 has rolled over. That slope projection is down, and the PSAR is rolling up. So we're really right on the cusp of a breakdown here. We had the first breakdown yesterday. The fact that it didn't go any further lower than 366, I take that as a favorable sign. Like this could have been very easily to come down and test the Bollinger Band mean at 363.5, and then the 10-day low at, call it 362. So those are some key price levels. The 10-day range is only 2.8%. That's a little over 2 ATR. I would take the recovery day as favorable. It finished in the upper half of the big sell yesterday. It finished in the upper half, and then on the daily range it finished in the upper half. So it had a nice little recovery here in the afternoon. But with the slope of the 30 downward, and we're already testing the PSAR, and we've had 2 days with price action below the dragon, and the dragon significantly rolling over, the RL10 rolling over, and a lower high, that's trouble. So again, the 90 period regression line, the Bollinger Band mean, and the 10-day low are all within range, And remember, we had yesterday just that big sell-off day, just like that, and we could easily get down here and test the 10-day low. Then if that breaks, this is really nothing. There's nothing to stop it from getting to Z1 and Z2. So this is certainly a critical state in my view. All right, let's take a look at trying to get to our. We had a lot of trades today to look at. Where are we? Come on now. There we go. Sorry about that. Playing chart roulette there. So let's look at what happened in the sectors today. So we had the S&P down a fraction, down minus 0.17. The Dow Industrials down minus 0.7, significant. Broad Tech at 0.27, or the Qs were up 0.27. Treasuries up a half at 0.52, getting closer to the key price of 160. And then the Russell was strong today at plus 1.4%. So it was really the large cap indexes that suffered today. Let's look at the sectors that worked. So the S&P down 0.17. So Japan and Brazil marginally better at minus 0.05. Simon Property Group, the commercial real estate, up 0.08. Biotech, XBI, up 0.85. The broad tech sector up 0.87. So the S&P tech at 0.87 outperformed the NASDAQ at 0.27. Best performing sector today, clean energy continuing to just dominate at 7.1%. So I've been shifting more to, I guess you would call it I've been adding some symbols that are in that category of disruptive technology. If you just listen to Kathy Willie, who's the portfolio manager there at ARC, who have just been crushing it in every way. I've been reverse engineering their work. And so I've added, and plus I was listening to Sandy Monroe talk about batteries, and he's been a big fan of quantum space, which is the Volkswagen and Bill Gates solid state battery company. You saw the trade yesterday for 29%, up 38% today. I'm going to show that intraday trade. Ethereum 7.6. This ARC-G is the genome. So I'm going to be comparing ARC-G, which is the ARC management firms select gene splicing, genome aggressive biotech companies, And the point of comparison is going to be between ARCG and XBI. So in the same way that I monitor like XLK versus the Qs versus the FANGs to get a sense of the sectors, I'm going to be comparing XBI, which is the S&P Biotech, with the ARCG, which stands for ARC Genome. So they're up 5%. I've got a swing position in them. Pure Storage is an ARC Innovations position. They just bought $35 million worth at about 22.7. So that's still at a favorable price. Apple, Virgin Galactic, Salesforce, and CRISPR is a gene splicing company that's part of that ARCG, and that's one of ARC's biggest holdings. So in the same way that I've been tracking these other representative companies in high performance sectors as a way to kind of compare the sector to the to these targets. So I've added them. So you're now seeing a mix of the usual ETFs and sectors and the large cap stocks of the Dow. But also I've been adding some more of these targeted explosive growth companies. I just think I'm satisfied with the way that our statistical measures are giving us frameable trades and manageable trades. So I'm out of the Tesla trade now. I think there's not that many more people to buy it, to be honest. And I think the run up to 700 for the inclusion, I think that whole era is done. And now it's the era of Tesla as a member of the S&P and coming under more scrutiny every day about their earnings. I talked a little bit about that yesterday, but here's just another picture of that. So this is how many cars those 9 largest motor car companies, that's how many cars they sold. That's how many cars Tesla has sold. This is the market cap of those big 9, and that's the market cap of Tesla. So, I mean, it's clearly you can't, it's beating a dead horse saying Tesla is not valued right now as a car company. I haven't seen much compelling fundamental analysis about their non-car company business. It's really betting on the future and a belief that this time it's different in the power of personality and some unstated future earnings and technology innovations. And really, at some point, fair value is what the market says it is and what the people who are participants say it is. So, I mean, I can live in a world in which there is this kind of discrepancy, and I was happy to trade Tesla from 380 to 700, this year, last 6 months. But it just seems to me like we're undergoing a sea change in its dynamics now that the speculation about what's going to happen with the S&P inclusion. And so I just think that, reality always comes knocking, and I'm starting to detect some reality knocking on the door. So Tesla was down around 610, I think it was today, or 615, down from 700 a few days ago. So that's already about a 12 to 15% dust off. And it had a little rally and held this morning from this morning's pain and suffering. But we'll see. It's really just another tactical stock to me right now. Love the company. I love his innovations. But we're talking about price, risk, and reward of that company versus all the other targets that are out there. And so that is part of the reasoning behind bringing some of these other symbols in to look at legit alternatives that are also disruptive technologies in their own way. So things like, solid state batteries, the Bitcoins, the genomics space, Twitter, the FANGs, all those guys, Palantir. That's the composition of my stack right now. Okay. All right, let's take a look at the things that underperformed the S&P. So the S&P again at minus 0.17. The sectors that underperformed, highlighted in red. Healthcare down 0.3, materials 0.6, emerging markets and finance down 0.8 and minus 1. Steel down 1.2. I think that run's done, especially when you come down, look, see Alcoa and U.S. Steel off almost 3% today. Bitcoin at minus 1 point. So that one reversed pretty sharply today. Ethereum did well, but Bitcoin did initially really well and then rolled over sharply. So that I sold about 80% of my swing trade on Bitcoin. We'll see here in a minute. Still love it for the same reason I like trading Tesla, but it's just a trade for me right now. Now here's a cluster of XLE Energy, oil minus 1.69, oil exploration 1.7, the VIX minus 1.8, Mexico minus 2, wheat and precious minus 3, silver minus 4. So I think that little tactical bounce in silver is done. And then some of the big losing companies today, Devon Energy, along with the weakness in oil. So Devon Energy suffers a little more. It's more volatile, minus 3. U.S. Steel minus 2.9. Neo minus 2.8. Alcoa 2.3. CAT down 2%. Palantir and Tesla. Nikola and Walmart. So a lot of those, the high flyers, suffered today. And then more sectors down than up compared to the broad S&P. Only the Russell really showed that kind of speculative broad strength today. I talked a little bit yesterday about froth, and also on Sunday night I was talking about froth in the market. Here's just more of that Robin Hood effect. This is when TD Ameritrade cut its, when the commissions were cut to zero. Here was the average daily client trades less than 1 from April 18th all the way up to like December or November of 2019. And now the number of trades has basically tripled just on the cost basis. So that's clearly retail trade behavior. And for some reason, the dollars that are in a commission, people seem to treat that differently than a dollar that's in the gain or loss. Like I've seen people that will not take a trade, like to get out of a position that's starting to lose money. They don't take the exit because they don't want to pay the commission on the trade. The other half of that is that they're certain that as soon as they get out, that'll be the trigger to send it back up. So, but I've also seen that even the cost of low commissions can have an inhibiting effect out of proportion to the dollars at hand. But I think this is also just part of that Robin Hood effect. Robin Hood is what drove these guys to get to zero, towards zero. This was kind of cute. I just want to, if I can hopefully share this with you. So this is a Robin Hood video. And it's showing his buying power as he's going through time. hovering along around 7 grand. Then a windfall profits drives them to 41,000, and then rapidly loses it all and more. And then it's no fun anymore, is it? Yeah. How quickly those spikes happen. We don't want that. All right, let's just we're going to run through a number of trades here today. So this one was the Bitcoin, or not Bitcoin. This is a crypto. This is the Ethereum Trust. Now, I've been trading the trusts, and the Ethereum Trust has something like a large premium to the underlying. I want to say it was 80%. So it's really not aligned with the price. It says volatile as the price, but there's really a premium that's being paid for this. So this is one to be very cautious on. Having said that, however, this one was the close yesterday. Here's the VWAP. Here's the gap up, and the winter turns to spring. I buy it as it crosses the Bollinger Band mean. Have a stop at the belly of the dragon. So that's like about, let's see, 50 cents. That's about a 50-cent risk. I ride this up, and I just take the standard exit at the PSAR dot. So that's about a two execution risk win. It sells off, fall becomes winter. It holds at the VWAP. That's the least surprising behavior of all. We get a Z3 pinch. Winter turns to spring, so now we buy it with about this is about a 20-cent risk. Surge, holds support. I considered here, I wanted to see it get past the Z3 pinch, though, here. And then added the second position when it was really clear of all this crap back here. Gains. It held the PSAR, gave me a RLXD, added a third position, and then it was starting to get late, and I wanted to cash that one. So that was about, let's see, 1, 2, 3, 4, 5. So about 5R on the first one, probably 2R on the second one, 1R on the third one. So that's roughly 8. Plus these 2 is about 10. So that's what about 10 execution R in Ethereum looks like on the turbo portion of the trade. So there's a swing trade on this one, but this is putting some money in the bank from the day trade. So that's a turbo treatment. This is the QuantumScape. These are the battery guys. So here's where it closed yesterday. It gives a gap up, pulls back. You can see the VWAP. This is heavy buying pressure right in here to make the VWAP move that much. So when it breaks out above the daily high in the open right in here, that's why I buy this. There's my risk, like about a 3-bar low, and that's about $5. So we're long at about 108. It holds, resumes. This, I was really slow to get out of this thing because I was enjoying the rocket ride. So it was pushing Z3 the whole way and then broke sharply, and I gave back about half the open gain. So I was a little slow on that one. But that's a couple R. That volatility scared me. I considered both of these. Either one of them would have paid off on this move. But the shape of that volatility just had me nervous in the service. I didn't have the will to play it carefully. And I had other trades that I was managing that were a little more orderly, so I let those go by. But that's QuantumScape. It has some amazing properties intraday. This is clean energy. I have a more detailed one to show here. I'll get to clean energy in a minute. So this is Virgin Galactic. Don't tell my wife, but I have this one in her IRA. She thinks we're conservative and Tesla, but she's playing with Virgin Galactic here. So this was a gap up, sold off sharply. I've had trouble borrowing their shares before, so I just waited for the fall to become the winter. Then it crosses over the baby dragon, enters the dragon, departs the dragon, crosses the VWAP. So this is where I'm buying like that second, that trailing PSAR stop, like the stop entry, like right in here. And by this time, it had already crossed the Bollinger Band mean and the VWAP, so I felt like that was a low-risk trade, and I used the belly of the dragon as my initial risk, and so that's about from 24.90 to 24.60. That's about a 30-cent risk from here to there. I considered a second position here after 10 minutes, and it resumed. I wanted to see it get past the Z3 excursion, though, and so I added the second position here on a pullback that didn't even get into the dragon and then resumed. So that's the second position in. And then this was a powerful move, and then I took the sniper exit on the PSAR. So when things are moving that fast, the steeper that slope, the more inclined I am to use the PSAR exit rather than the Bollinger Band mean exit. I could also support like a Z+1 exit in here too, but this is about the same thing. So that's a pretty good trade. That's about 1, 2, 3, 4, 5R on the first one, and probably two more R on the second one. So that's about 7. This one is PSTG. This is a Pure Storage Inc. This is a cloud storage system, a B2B storage system. And this is one of the ARCs, another one of the ARC candidates too. So this was my first day of trading them. I waited about 10 minutes, and there was that nice big gap up which held, and it started moving out. So I just held my nose and bought it here at about 23.20, with a risk down here at about 23. So that's about a 30-cent, no, maybe a 20-cent risk. So 23.20 and call it 23. So that's about 20-cent risk. And again, on this really powerful move that's paralleling the Z2 line, then it becomes natural for me to take the PSAR stop. That bottom ticked me, so I bought the crossover of the dragon again. It peaked pretty quickly and came back, and so I just took the PSAR exit again. So those two. But this time, this one also felt pretty volatile to me. So, I wasn't going to try to short it. This is the first day I've been trading it, but this would be a natural place to short here on the break of the Bollinger Band mean. I considered the supported spring crossing, didn't have the will to do it, but that would be a really good signal. And if you took that one, this one might get you out, and then this one would get you back in. And I exited shortly thereafter at about 23.73 for a little gain. So this one feels tradable. I also have I put a swing trade on this one. I wanted to keep it because the daily and weekly charts look really good, and it's an ARC investment. So I kept the fifth of the shares on this one as a swing. This is the Bitcoin Trust, the GBTC, and let's see. This is the swing portion of it. So thanks to Danny, our initial series on this thing was getting in around 13 and a half, and then building these positions, the second, third, and fourth positions, and then on this big gain, we scratched that last one and collected all of this. We're lucky enough to miss the big sell-off, miss the rebound, but now we have this is a standard. I like things to settle down, and let me just see a COTA 2 entry, and then Bitcoin became the rage. So each of these were day trades that were kept a piece. So we had 3 swing positions in that one, and then today I just exited this at 30.73. It just felt like it was time to cash the swing, because it had been flirting up here with the Z3 lines and was much more volatile here and speculative than in this. This is an accumulation. This is speculative trading. This is froth. So I was much quicker to get out of this. I don't have a philosophical commitment to this as a position. I have a commitment to it as a tradable instrument, and I'm aware of the long-term value of it, but I really just look at this as through a trader's lens. So that's the Bitcoin trade on the swing. This is the so this is a daily chart on. This is the swing trade on PBW. So those of you paying attention along the way have watched us trading this thing. Here it is back in late September, and look at these long orderly waves of movement. And so we've been enjoying all this. We got out of it up here after it peaked at like 98. We took the exits in here as it started getting frothy, and took the re-entry. So this is the resumption of the swing trades over here. And so this was part of an intraday discussion I had with Ken Hum. He said, hey, where would be my stops on the swing trade for PBW? And so I wasn't sure if it was just starting one, or so I thought I would just go over my generic approach to managing the stops on this one, because I'm still in this position because it closed really well today. Let's zoom in so we can see the swings. Okay, so again, these are daily charts. So this is the re-entry on the supported fall crossing. That's a COTA 2. So there's the initial risk. This second position here. So I'm turbo trading this one as we go through here. But these are the residual swing trades. So this one, I kept the day trades in there because it had broken the PSAR and was testing the hump of the RL10. And so the stop on the swing, which started off here, moved up to here on this big candle. I didn't add anymore because it was really volatile. It gapped down, and then when it took out the close, I decided to add a third position here, and that brought the stop. Initially, the stop was here. Then when it closed well, I moved my stop to here at the end of the day and kept that in place. And then today, it gapped up. As soon as it gapped up, I moved the stop from here to here and added the fourth position at about 104. That's this position here. And then as that started moving up the stack, I raised that one to lock in the gains and just kind of left it at 104-ish during the day. So this was around noon is what that picture looks like. Let me bring my stop back. So essentially what I'm doing here is I'm using, 2-bar lows and locking in gains with money management to manage the swing trade. And then the intraday portion of that. So I want you to notice when this swing trade stop raises to 104 intraday, in order to lock in the gains on the fourth position and really all the other positions too. This is what that looks like intraday at around, this is happening right around noon. Is the stop gets raised up to like 104.5. So going into the day, this is where it closed, and like I said, we had 3 positions on, and then it gaps up. And when this closed here, my swing stop was just below the daily VWAP, because with 3 positions on, and if this thing breaks down, I don't want to stick around longer than that. That's enough in these volatile times. Tom asks, he's curious, since PBW is also in the BMR ETF 30, would I exit that when it got frothy and broke below the dragon? I have been taking like half of it off when when I have a big swing trade position on here, like I do on this one. I go ahead and take half the BMR off too, because the position is it's becoming really large, and PBW has been amazing. And then when I'm ready to re-enter swings, I put the rest of that BMR back on. You wouldn't be wrong just to keep a 10% trailing stop on the BMR portion and just leave it alone, but I tend to get a little finicky when I have such a large position on PBW like that. It makes me nervous. And it has the BMR position has been an exceptional win, so I'm a little quicker, I think, to take instead of a 10% trail, it would not be unusual for me to use like a 5% trail. So like in this case, the intraday move was to 107. So the BMR position would be like at 102. That's what a 5% BMR position would be. And so that's pretty close. A 10% would be around 97, which would be more like yesterday's VWAP. So I don't think that's a bad place to have the BMR exit. So you're really just talking about, for the whole BMR position, do you want to be out at like 98 or 103? The way this market is right now, near all-time highs, I'm happy to get out of the BMR at 102. The swing positions, though, would be out at like 104.5. That would be this one. So we enter the day with the stop here at yesterday's VWAP. There's a big favorable gap, and I'm buying the turbo. Everything north of the thick red lines is tactical turbo trading. So let me try it this way. It's maybe easier to tell the story if I hide that screen. All right. All right. So we start the day with the stop down here at just below the VWAP. Here's where it closed. And then here's the big gap up, and it starts moving up smartly. So I just add the turbo position. This is just an automatic hybrid frog entry, with about $2 or $3 of initial risk, and off we go. And then you can see where my stop would just be down here near the low of the day. Second position, and as I'm moving the Wu Wei stop up to the PSAR, and I'm putting that second position on in a routine way. Now I pick up the Bollinger Band mean, add a third position, Bollinger Band mean, Bollinger Band mean, could have put a fourth, rats. Then just live with it. And so I'm going to just take the managerial exit on that one. That's a really good trade. But meanwhile, while all that is going on and it feels really good, I'm raising the swing. Remember, I've got 3 scoops of a swing position on right now, and this is where the stop was. So in all that, I just raised those up because I want to lock in about another $5 per share on a triple-sized swing position. So that's the swing position here while I'm doing the tactical turbo trading inside here with much tighter stop and a larger position size. I have a hard time shorting things that I'm also long on. It gets confusing. So all I'm doing here is just waiting to see what it's going to do. I was actually hoping that it would find support here at the VWAP and then take off so I could re-enter, but it didn't. So now I'm saying, I wonder if this thing is going to come down and hit my swing stop and be out, or is it going to find support and give me a supported spring crossing here? Well, that's what it did. So there's the winter. That's what makes this a supported spring crossing. So we just enter in the usual spot, take a tactical exit. Now, what I'm feeling is this, as we're getting towards late morning and towards the lunchtime, I now see this series of lower highs, and I take that opportunity to lock in about another $4 on the swing position. So now the swing stop is right here. I raised it, and I raised that because this was really an exceptional move. Yesterday, this had closed around 100, maybe 102, and now it was running up around 107. That's a 5% move, so I want to preserve that on that 3-sized swing. So I go ahead and lock this in here, and I'm still interested in tactical trading. There's a Z3 pinch. There's a support. There's like a Z3 pinch breakout, and that scratches. So I was really strongly considering right now just selling at the VWAP 2 out of the 3 positions from the swing. Not only, so this is 2 day trades, one that had a fractional win and then one that was a scratch. So it feels like it's running out of gas. It's having trouble getting back up to 107. So I strongly considered just cashing 2 of the 3 swings right there and take advantage, and then just be happy with the VWAP. And if that but I just kept it on right there. So if the red line gets hit, then I'm all out of the swing position. And that's about where it stuck. And then there was a strong move in the afternoon that took this all the way back up to 107.5. And I didn't trade that because I was mentally tired. But my stop for the swing is right here, like at 104.5, and that'll be the whole swing position. Okay, so I did not add to that because I already have a large swing in PBW, and I didn't want to increase that. So that's the PBW trade. So that is a demonstration of the turbo technique, starting with the symbol that already has a very strong swing chart. So now when that's the case, like that's the best swing position I have. And then, so this move here was very easy to believe in and easy to trade quickly, and then just make extra gains on something that is really crushing it with the swing. And then what I'm doing is I'm taking steps to lock in the swing and lock in the next swing so that I just preserve that capital and preserve sanity. Okay, so that's what I want to say about that. That's your lesson on turbo exit management. All right, let's go to the daily report now. So we've already seen daily. We are still bullish normal. Excuse me. Overbought on the 270 and the 90-day NDX. High normal on the 30. We're back to just below average on the 10-day and 2-day NDX. ADX is getting stronger on the bull side, 22.5. ATR percentage, 1.2%. The risk index is 0.973, so risk off. And that's legit considering we're starting to see some frothy moves now at these all-time highs heading into the holidays. Risk Z is at 0.35, so we're still a living reminder of potential weaknesses. Now we're starting to see some channeling rules come on, EPP and EEM. EEM especially interesting because it had been so strong as a global index, maybe the strongest global index. And they also fired on overreaction system. So any kind of strength in those tomorrow is an easy intraday entry that would lead to the swing. Oh, Tom, I just saw your note there. Would I exit when it gets frothy? Yeah, I think I answered that question. I use that combination of the BMR monthly adjustment informed by the swing trade chart. So I kind of try to put the fine-tuned exit on BMR, especially if I'm holding a large win, a multi-month win like that one has been, that I don't just necessarily give back a full 10% of that. I will. Once it gets past about 15% open gains, I don't like to have a 15% win in hand and then give back 10% to net only 5%. You know what I mean? So when I get to 15% open gains on the BMR, I just tighten that stop up to 5%, so I get to keep 2/3. Okay. Lots of dojis today, lots of channeling and overreactions, plenty of auto framers to choose from. XLK was very strong. That was the only one to break out, so we like that. Also joined by the Russell, real estate, and the mid caps in terms of big percent winners today. So it was the not large caps that won today. Let me hit the Dow 30. A lot of dojis there. Plenty of channelings. Plenty of auto framers to pick from. Intel is still interesting. It was a doji, a 5-day down, and 7.5 to 1 on the risk reward. So that's Intel. That's worth some attention. Apple crushed it today. With breakouts on the 10-day, 1 month, and 3 months. At the bottom end of the stack down here, Verizon, Walgreens, and Walmart all suffering short term. Auto Framer has a ton to choose from, and all the key framing data is provided for you in there. I'm not going to go through that whole list, but energy is starting to set up again. The S&P is auto frameable, so that pullback is significant. And because of the relatively low range today, that range risk becomes attractive. Daily squeezes, quite a few. Disney and the S&P up around 2.7. There's Intel at 2.5. So if you're framing an Intel as on the auto framer, you might want to pay attention to the squeeze possibility as well. Almost everything in the fall for the ETFs. A good portion of the Dow is in the fall as well. Apple and Nike look really attractive to me in the summertime. Many more got crushed today on the sell-off than made bank, but Salesforce and Apple. Salesforce is really setting up nice. That was a pullback and supported spring crossing entry that we framed this weekend. That's really looking good. Danny has a great options trade on that one. For those of you who are into options, his options course is amazing. I suspect he's going to have a holiday discount for that. But I'm trying to talk him into raising the price on that course. It is very good course, and I want his time to be worthwhile. So I'm going to try to persuade him to raise the price on that course, to be fair to his hard work. Consumer staples in Mexico sold off. Big sell-offs there still in gold and silver. And otherwise, it was the big techs and the Russell today making their move. I would look to see more of those gains like that tomorrow. And I think that's everything I want to cover for today. We've got a lot of trades to frame, and that's everything I wanted to share with you tonight. Okay. So